following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the November 1st, the amped up after Sugar Day edition of today's Trader's Edge show. Of course, this is Terrific Tuesday. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to check out the circumstance of these markets. We're going to go figure out what the bulls and the bears are communicating to you and I, what the buyers and the sellers are or are not communicating to us. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in. Now is not too soon, 877-927-6648. Of course, internationally, 727-445-1044. Let's go ahead and get this show started on Terrific Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, the Dow trading up 89 points, trading at 18,053. S&P down 14 at 2111. NASDAQ Composite off 36 points. She's trading out at 5152. Russell 2000 down 11 points, trading 1180. The DAX closed off 138. The FTSE down 37. Gold is up $17 and change. Silver's up 66 pennies and change. And not much more change after that. You've got light sweet crude back 38 cents. Bonds, 30-year Treasury, trading a bit lower out here, leading the charge here to the upside. You've got Williams Clayton Energy. That's got a bunch of energy, nearly 10% worth, up $8.41. Martin Marietta, MLM, not to be confused with multi-level marketers out there. They're up 4%, nearly $7.60. San Filippo, John B. and Son, up 15% or $7. Heska Corp, never heard of Heska Corp, but we probably should. It's up 14%, almost 15%, up $7. To the downside, it is at NetEase, uneasy today, down 3% or $8. Priceline is off $7. Insperity down nearly 10% or $7. Equinix off 7. So where would you like to begin? I'll tell you where we're going to be. And this is where everybody else seems to be beginning today. So why should this be any different? The reason it's going to be different because I'm going to share with you stuff that, well, you be the judge and jury. I'll just share with you information, and you make a determination on your own as to what this means. Now, I don't know how the market is going to end today. We'll go try to figure that out, too. But let's, at this stage here, go with the assumption that the market ends, in essence, where it is right now or worse. In fact, the worse, the better for the bulls. And you might say, blasphemy, how can you say that, Steve-O? Well, I just really want to give you the facts, give you the facts, man. Now, I posted this chart here, provided it in the Tiger's Den before we got going, and I asked the question, this is a 6-panel chart, taking a look at various VIX products out here, different patterns, tools that I take a look at to help identify what the market is communicating to you and I. And the question I pose is, which of these panels, of these 6, is the one that is the most important? And, of course, we have some intelligent folks that are inside the den. Immediately, they went to panel number 4, bottom left out there. Now, what they pointed out, which is the easy thing to point out, and you want to understand that too, which is right now the VIX index one-day rate of change is 12%, trading out at 1912. If it closes above 10%, we have what we like to refer to, you and I, as a one-day rate of change of greater than 10%. That's really not the most important thing, but we can't just mention that and then not show you what that actually means out here. So let's go into what does that mean? What has that meant in the past? We go take a look at that 1-day rate of change chart out here. Now, this is a positive, not necessarily positive, but a positive 1-day rate of change, meaning it's greater than where price closed yesterday versus where it's trading today. You subtract the two, divide by yesterday's close, voila, you come up with the 12%, 11.96 right now tells you you've got a 1-day rate of change. Those reflect all of the blue arrows on my chart that you're looking at. What do odds favor when you have a 1-day rate of change, should in fact the VIX index close like this, the following day? Certainly within 48 hours, but really at this stage here, it's pretty much been the following day. You're exactly right. It identifies a bounce or bottom inside of the marketplace. That is all those blue lines that are on my chart out here. What's the percentage of the time? So high out here that you just simply cannot, should not ignore it. Now, it's possible this could be turnaround Tuesday. We may not see a VIX index with a 1-day rate of change greater than 10%. That is if you were bears, if you are bears, that's actually what you want to see. You want to see the market or the VIX index move back. You don't want to see a 1-day rate of change. You might be sitting there saying you're licking your chops, you're doing this or that or the other thing, whatever that other thing might be. I don't even want to hear about it. But what you want to look for in the market is you want to see this market, or you want to see that VIX index pull back out here. Okay, that is number one with regard to the market. You know how to calculate it. You'll be able to determine what the market is likely to do, at least in the futures marketplace, overnight. So if you get a bad close today, you wake up tomorrow, futures are higher, you're going to say, well, you know the reason why, right? You just simply know the reason why. You know the previous pattern. That's really all you and I need to do, is understand these patterns in the market. We can then eliminate all the gosh darn noise that runs through our skull out here, our head, and then go ahead and be able to make good decisions. So look, if you are long the volatility index or one of its products, and you see that 1-day rate of change greater than 10%, and you can only trade during basically regular trading hours, what is it that you might want to consider doing? What do you want to do with that bread? Yeah, exactly. You would take it off the table. You would take some of it off the table, all of it off the table, get your principal back. You would be doing something along those lines. Now, here's what's really important on this chart. Even though you might think, because we just spent the last 3 minutes covering that might be what's really important. If you take a look at this chart out here, this is just really a data chart. You're going to see the futures contracts. You're going to see October, November, December, January, February, March out here. And if I were to ask you, actually you're going to see November, if I were to ask you right now, the cash VIX index trading at 1913. So the next month out here, which is November, which we're in right now, the futures contract for the VIX is traded 1823. 1823. The cash is a contango, for goodness sakes. How? You heard me. The question is, how fearful? That's the only time you will hear me use the word fear with regard to the VIX index, because otherwise it's just hogwash out here. How fearful are the futures traders with regard to the November contract? Hey, forget about November. How about December? How about the December contract for 2016? Traded 1806 versus 1911. I'll forget about that. How about January? $19 versus 1911. Folks, if ever there were signals that something is out of whack, guess who's out of whack? Yeah, cat's over. It is the cash VIX index that is out of whack here, not the futures contracts, for goodness sakes. Rhodes with TFNN. Nobody else is going.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. You know, a wise man, I'm not sure who it was, but it was a wise man. He once said, if you change, that's right, if you change the way you look at things, the things you look at will change. That's all I'm really doing for you here is I want to change the way that you look at things, because we hear such stuff that goes on that boob tube out there, and I don't want you getting sucked in to that information. There is useful, very useful information. Instead of looking like a deer in the headlights and saying, wow, look at that VIX go, or that S-car go, right, from the movie Trading Places out there. This is useful, very useful information. Now, that doesn't mean that the market, I'm saying go buy the market right here, right now. You want to be able to look and find a pattern, because until you start to see those other patterns out there, hey, there's no question that sellers are the ones in control of this market. Once they went through those key levels of support out here, that's the 2120 level. We gave that to you yesterday inside the ES Mini. You know, it spelled curtains for the buyers out here. It says they were getting run over like a steamroller. And at this stage of the game, if we take a look at these 30-minute charts out here, I don't see a reversal pattern of any shape or form out here, not at least at this moment. Now, if we take a look at, this is kind of an interesting, I see Danny mentioned something here about Trump or what have you, and what's the market have to do for Trump to win. Here's what I actually want to, I'll answer that question for you, Danny, and it's going to go like this, but I want to point out something that, if it's okay with you, that I think is even more important. And that way, when you hear all this crap, I can say crap right on this station because it's the word that starts with C, not with the word that starts with S out here. But if we take a look at presidential cycles, what was needed in order for Trump to win was not to have the October 13th blow, get taken out, or October 17th. And we're trading below that right now inside of the Dow. But here is my take on this chart with regard to the presidential election cycle. There hasn't been enough movement to the upside off of that bottom, enough movement to the downside. And I would say, Danny, that the stock market cycles for presidential elections is uncertain. It is not a clear pattern out here. If there was a clear pattern, man, I would be all over it to tell you there is a clear pattern. Even the stock market is confused, just as these futures traders of the VIX products, they're saying, what in this Sam heck is going on out here? We're comfortable staying where we are. Now, with regard to what I really want you to anticipate, let me see if I can get this chart out here. Since we have 1 week to go before the election, is over the last 84 years, 21 election cycles, going back to 1932. Here is what we really do know, and I'm just referring to this week and what to expect next week out here. I alluded to it yesterday during Tom's show. I like to do accurate work. And when I say accurate, I mean dead balls on accurate work out there. And what that means to you is, if we take a look at this chart, that's not the one. Here it is. I like to go back and take a look at, with regard to election cycles, hey, here's the election date for 1932, which didn't necessarily fall on November 8th. In fact, it didn't fall on November 8th. It might have been November 2nd or November 3rd or whatever the date might be. Hey, by the way, do you know that we did not used to work on Election Day? Did you know that? Did you? When did they throw that out the window? That's the secret question right now. Somebody see if you can go figure that out. I can tell you, by the way, and it's kind of, I'll give it away to you, Orwellian about the whole thought process behind that. In any event, I like to go take a look at the exact 5 days before and the exact 5 days after to see what has the stock market done. This is irrespective. Is that a word out there? With regard to who's going to win or not. And the odd thing is that beginning tomorrow, that's right, November 2nd, if we take a look at the last 84 years, or really the last 21 election cycles out here, interestingly enough, the Dow moves higher beginning tomorrow. So I'm sitting here saying, taking that 2x4, do things happen for us or to us? And so I didn't really have to smack it up against my head and saying, really, very interesting. So we'll see if this cycle plays. Oh, what does it do? What's the stock market do? And basically move sideways to higher. And then come election day, could be the day before or election day, what does the market do? This is, people are going to tell you it's because HRC won or it's because Trump won. They're all full of, yeah, exactly, because this is what the market does, for goodness sakes, out here. Doesn't matter who it is that is elected. This is what it does. Hey, yeah, it's on average, and neither you nor I are average out here. We strive for extraordinary. We do not strive for perfection. Lowest absolute standard that anyone could try to achieve, because it does not exist out there. That's the beauty of these patterns and everything else it is that we trade out here. But what the market, so here's what we know. Let's put it together. We know that if the market ends poorly today, you're going to have a one-day rate of change greater than 10%. We know that futures traders of VIX futures are sitting here saying, are you kidding me? Okay, go ahead. Go ahead. Keep buying. Keep paying up for that insurance out here. Wrong move. But if ever the market was setting up for a bottom, now, when is that actually going to occur? You know, is this the pattern that's going to play out? I don't know. I don't know. We'll continue to, but this is what has happened in the past out here. The most important thing I would like you to take from this chart is, regardless of who it is that is elected out here, the market's going to sell off, or it should sell off. And what I want you to really prepare for is not between now and then, and not be on election day and play that to the short side, although you want to be taking a look at the patterns maybe from a day trading standpoint. What I want you to do is I want you to prepare for that next move out here. That's what we really want to be able to do. So we'll get to that when we can. Now, yesterday I mentioned to you, I said, hey, kind of searching for this bottom. And ideally, what I would be looking for is some type of divergent pattern inside of the advanced decline oscillator reading. Now, I don't know how this chart's going to end at the end of the day. But another 2x4 hit me upside the head. Let's see if that 2x4 is still in effect out here. I'm referring to the trading day in the NASDAQ composite. I mentioned the New York Stock Exchange yesterday, but I mentioned it kind of lightly, like, I don't really care. You can't trade it. I can't trade it. Doesn't mean a whole heck of a lot to us, other than it's nice to put up there. But the NASDAQ composite has got more meaning to me. So let's see how this closes out the day. And right now, we're just kind of sitting, we're right here on the thin ice. 162.03 minus 162.03 was the reading on the close on October 13th. we can see that October 13th low has been taken out today. The reading right now is minus 162.25. It'll change back and forth, 162.05 out here. How this closes, we could see this. I don't know if we will, but we'll be watching it at the end of the day, right? And boy, I hate saying at the end of the day, but I have to say at the end of the trading session is what we will be watching for to see if we have this divergence. I don't know if we will have it or not, but the divergence in essence would look like this. We have gotten to a lower low, and what we do is we end up with a higher low inside the advanced decline oscillator reading. It'll be subtle. But, folks, we want to pay attention to subtle things. Now, with regard to the New York Stock Exchange and its patterns out here, I know somebody was raising their hand saying, Steve-O, isn't the advanced decline oscillator reading in the New York Stock Exchange below minus 150? Why, heavens to Betsy. Who is Betsy anyways? It's minus 176. What's the New York Stock Exchange message when it gets down below minus 150? Oversold? Oh, my goodness, I believe you're right. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow being off 96 points, S&P down 16. Let's go out to Robert in Chicago. Robert, thanks for calling. Thanks for holding. How was your Tuesday going for you?
Yeah, it's beautiful. We're experiencing summer here today. It's going to be above 70 and it's sunny, so
It looked like
extraordinary weather.
Yeah, it looked like the game on Sunday was not as cold as Saturday's game. Was that? I didn't really check the thermometer, but it looked like people were dressed a little bit lighter.
You're right.
Yeah,
that's right. It was. God, I can't remember which day that was, but yeah, one of those days was just 42.
Yeah, that was. I think that was
cold.
Saturday. Yeah, I think that. Yeah, I was like, there's nothing cold. Look, it could be 62 in a baseball stadium, and the wind gets whipping through there, and that's cold. At least as far as I'm concerned. Yeah, 42 degrees. Whew. But hey, so you want to take a look at Procter and Gamble? You and I have looked at it for a while. Yeah, go ahead.
So last time we talked, the next day they came out with earnings, and it had a little pop. And again, I want to look at this in terms of a longer time frame. My initial strategy was to buy it around 84 or 83.90, and maybe get some upside towards 96. But that's going back maybe 3 or 4 months. And our most recent call, you thought this might not go upward. It might not go in that direction. So I wanted to get back to you.
Here's the hard thing to here's what we're taking a look at, folks. Number one, we had Procter and Gamble gap to the downside on the trading day of October 19th, moves down with about 13 million shares. I'm just rounding to the upside, but yet comes out with earnings. I'm guessing it was either after the close on the 24th or before the open on the 25th. Whenever it was, this thing then gaps up to the upside with nearly 21 million shares. And on that day, I thought of you because I said, could it really be that it created this island bottom out here? But today we don't have to worry about that because that gap here has been closed. And so the answer is no. No, it has been trading basically sideways ever since that move to the upside. So, this is a possible spot where, one could consider, adding to a position or in a position inside of Procter & Gamble. It's not the ideal spot. I would rather give you the ideal spot and wait to see how this plays out here. And that would be coming really back to where this broke out. So, you know that one of the things that Tom has taught us all is to, when you see a sign of strength, wait for price to pull back to that breakout area. And that's really what a gap is to the upside. A gap to the downside is a breakdown area. A wide-ranging bar is, you see accelerated volume. You see a wide-ranging bar out there. Price pulling back, in essence, towards the bottom of that would be a place to buy where price coming back to your breakout area. Now, in the case of Procter & Gamble, Robert, that's all the way back to the $84 level, 84.06. So, okay. I think your original trading plan, it's hard for me to right now argue with it. I just don't know whether it's going to pull back all the way to that 84.06, but it is worth at this stage here, I think, waiting for.
Great. I would love that. I would love that to happen. 84.17, 84.06. I'd love that.
Yeah, in that could 84.70 could be. But what you want to do, the nice thing, let's say that the market plays out this way, that it's going to continue to pull back to where it broke out. Then what you have is a nice little benchmark. On that trading session of October 24th, you've got 10.5 million shares. If price is pulling back with light volume, then that's really giving you, a entry type signal out here. Whereas if it's starting to move down with accelerated volume, then what this says is Procter & Gamble could actually be forming an A to B equals CD to the downside. And that's what I don't know. That's what is not clear to me on this chart out here, whether that is the pattern, which would take you to 81. But in this case here, it's one step at a time. We know that this broke down. It broke out. This could be just a consolidation type area. And why don't you try to buy it towards the bottom of the consolidation, 84.06 to 84.70 at this stage of the game.
And, Steve, when you're looking at the 84.06, do you have it on a longer-term view? Like, we wrapped up the month of October here.
So if we want to take a look at – that's really just on the daily chart, and that's the bottom. That would be testing, to the penny, the low of October 24. So that would just be looking at that. If I look at Procter & Gamble on a monthly chart out here, from a monthly perspective – you've got a key. Let me turn off some of these profiles because they're just cluttering the chart out here. And what I would have you notice from a monthly perspective is we exceeded last month's high. we exceeded last month's or got below last month's low. You had a bearish reversal signal. That does not necessarily bode well for what we're seeing out here. But I would need more evidence than that in order to say, because what it did as well is it tested and rejected the swing point from December of 2014. Robert, and that swing had 142 million shares, and last month you were up at 376. That really says that we should be back up there again to at least test that area. That's really how I would read the monthly chart for Procter & Gamble. But at least here, the monthly chart is just confirming what you and I talked about, that you might get this to really pull back into that breakout area.
And do you have time for another one?
I always have time for you.
Well, I'll give you another one that I've called out before, and they report tomorrow. That's Whole Foods Market.
Yeah, okay. WFM, Whole Foods Market. And what are you thinking here? Because you've been looking at the chart.
If I could buy this at 28 and sell it at 36 or 34?
Yeah, so let's look at Whole Foods Market. Let's take a look at the current message of it, because there's several here. But let's take a look at the most recent one, work our way back on the left-hand side. So on this clean version of the chart for Whole Foods Market, what we know is this had a sign of strength off of the bottom. At least that's what it appears to me. That was October 6th, when it did 19 million shares to the upside. Now, we talked about how we wanted to wait for Procter & Gamble to pull back to the breakout area. That is exactly what Whole Foods Market has done. If you take a look at yesterday's move lower, 4.6 million shares going against 19.3 million shares. Now, that's what it's doing. The problem here inside of Whole Foods Market is risk reward from a trade standpoint. And the reason that I say that, if you take a look at the yellow line on my chart out here, this also happened to gap down with volume back on September 7th, 16.8 million shares. So this looks like you are in a trading range right now from about $27 to $29. And, I don't know if that is, and you're really taking a look, when you mentioned Whole Foods, it almost sounded more like a trade versus Procter & Gamble to you. Is that, did I hear that correctly?
You do, because I don't see Whole Foods getting above that 30, 36. I'd be glad to move it out at 36. So my trade would be, risk reward would be get it at 27 or 28 and move it out at, sell it at 36 or 34.
Yeah, I actually think your trade is more like the setup right now is you'd buy it around yesterday's low, 27.99 or so, and you'd sell it around 29.47, 29.52.
Okay,
now,
all right.
They come out with earnings, so it could certainly gap higher out here. But the benefit that you have with regard to what at least shareholders are believing, so the fundamental aspects of this is that you did have a nice sign of strength on October 7th. So, be careful, but that's the pattern that's inside of Whole Foods Market.
Thanks very much, Steve.
You bet. That was Robert in Chicago. Good luck to your Cubs, even though he's not a White Sox fan. He still probably roots for him, I suppose. Steve Rhodes with TFNN. We'll be right back, folks.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed with TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's off 119 right now. I meant to say Robert is a White Sox fan, not a Cubs fan, but he still probably roots for the Cubs out there. Let's try to get some of these emails. I'll go in reverse order. That might be easier for me right now. Les writes in, "Hi, Steve. I'm listening now. Wondering if you're expecting an upcoming high volume QQQ low for the next tradable low." So if we take a look at the Qs, if that's the case, then Les, today is not going to be that day. If we take a look at volume inside the Qs right now, 11 million shares. It's 140. We've been trading for a good solid 4 hours, right? 9, 10, 11, 12, 1, 3. Yep, I got that right. We've been trading for basically 2/3 of the day out here. So just straight line math. And that is going against volume of 39 million shares. So you're pulling back into its swing point, still trading inside that September 12th swing point, doing it with light volume. If you take a look at your TAS weekly profile, 115.38 is the number to pay attention to out here. But what we do know about the Qs today, at least, Les, is that it is pulling back with light volume. With regard to what am I looking for as far as the next bottom inside of the market, some of it's timing, some of it is just simply a pattern, price moving lower, less relative energy, divergence patterns, like I mentioned earlier during the show when we took a look at the advanced decline oscillator reading inside of the NASDAQ out there. So they'll show up. It's the divergent patterns that will show up when and if that occurs out there, as well as other things like we took a look at the VIX and so forth. Okay, Ken says, Steve, looking for a buy target on X. So if we take a look at United States Steel out here, let's go see what this is doing. This had an explosive move a few days ago, is now pulling back out here. This had a little sign of strength. That was on the trading day of October 20th, 41 million shares. Stays pulling back with 13 million shares. It is trading back below its TAS daily profile low of 1863, trade at 1847. So, Ken, that would say you're looking to buy this. That would say this has further to go. Now, I'll give you the price targets. If we just take a look at simple retracements from low to high out here, we would say that the next level to be paying attention to would be 1799. Today's bar, if we take a look at it, really kind of a wide-ranging bar. So instead of the 0.618 retracement level, I would say my eyes visually go to the 0.786 area. And the reason is because we have two kind of wide-ish ranging bars with volume out there. So if you're looking for a buy into U.S. Steel, I would say look at that 1718-ish area. And you'd like to continue to see it to do that on successive lighter volume days versus even volume accelerating. And I would look at that more so than what it was going against, so to speak, that being the day of October 19th. So, Ken, I hope that helps you out. Good luck with that trade. I don't see any other levels of support or anything that you should be paying attention to. We've got, let's see, who is next up on here? Good afternoon, Steve. I'm along both Nugget and J Nugget. Should I take my profits, or do you think it has more to go? Now, this is a situation where this listener, Tom, bought in yesterday, which is and therefore I would have to answer it based on buying in yesterday versus looking at this as more of a long-term hold, right? But let me give you the information regardless. If we take a look at the Nugget and the JNUG, what I want to do for you, Tom, is just because there's another, a couple other emails that came in, and I think it's just better for us anyways, is just take a look at the GDX, the Gold Miners ETF. Now, we're going to look at that, and we have to take a look at gold and silver and see what they are doing, because this is typically going to track along with that. Now, volume today inside of the GDX, 41 million shares. This had a little downdraft with 232 million shares back on October the 4th out there. Does that mean you should sell it? Not necessarily, but it is going up against a supply line. And since you just bought it yesterday and it's really a trade, those people that bought on the trading day of October 3rd and thought, hey, this is a good buy, GDX between the 25.65, 26.57 level, I will go ahead and borrow from one of LP's, Larry Pesavento's. Those folks that, and you know what I'm going to say here, that thought it was a good buy, we're saying goodbye in a negative way on that trading day of October 4th when this thing gapped lower with volume behind that move. So this is a natural supply line area. If we just took a look at the GDX and it did not move based upon the underlying instruments of gold or silver, that would then say, yeah, go ahead and take your bread off the table. You had a nice trade out there. If you were in this trade from the long haul, like I am, like subscribers, and because we were looking at this as this being a potentially significant bottom. You know that. I have shared that with you in one way, shape, or another over the past couple of weeks out here, or less good week. Shoot, 5 or 6 months ago, I said, look for a bottom in gold in October. I don't know how much further out we could take a look at this. Doesn't mean it's going to happen, but so far, so good. So I would answer your question that way. Now, from the longer term perspective, and also even short term, let's just go see what's going on with regard to gold and silver. Let's take a look at silver out here, up 62 pennies right now. What do we know about silver? Well, we know about silver at this stage of the game. Let's see if we can populate this. This is a potential beautiful thing. Won't know till the end of the day. But, Tom, I would pay attention to the price point of 1836. Now, you're trading at 1841. You'd like to see it more than just 5 pennies above that level, but closing above 1836 would be extremely bullish out here. That would be up above the resistance level of its weekly market profile out here. But at this stage of the game, looks to me like maybe that's going to be resistance. Maybe we see some chopping around sideways, something along those lines. So, it hasn't taken out with conviction. So, another message from a short-term trader's perspective that, hey, maybe going ahead and taking your profits are okay. Long-term, what does Stevie think is the pattern that could play out inside of silver? If this is that bottom that I was looking for 6 months ago that said look for a bottom in October in gold and silver, I'm looking for $24 to $26 on the move. It is over a period of time out here, and we've got a lot to get through before we get there. But that is the pattern that is in play out here. If we go take a look at gold, up 16 bucks, nice move out here as well. This today, is bullish. It's up above the daily profile. Let's go ahead. You can see the A to B equals CD patterns here. We're going to turn those off. Those are the real short ones out here. The longer one takes it up to 1565 or 16 somewhere. That is where gold is likely headed to. But right now, with regard to gold, Tom, its message is, hey, it's up above resistance, and that resistance should become new support. And that's 1278.50. This says that gold wants to trade up to 1300 even Steven. If you close above 1300, 1323 becomes the next number out there. If I were going to go take a look at short-term charts for you for gold, I would put up the 30-minute chart out here. And this says here, let me hit the update please button. And this says that gold on a 30-minute basis got to wave number maybe it got to wave number 6. Let's go ahead and count from the C point out here. No, it got to wave number 7. So there is your answer with regard to a short-term trader's view on what one ought to do with regard to GDX out here. It doesn't get any simpler than that. We can not pay attention to that A to B equals CD, but instead take a look at the wave count that formed out here. Price moving higher, doing less relative energy. Yeah, short-termers should go ahead and take their money. Long-term, I say stay the course. Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's off 139, S&P down 21 points. I tried scan the den just to see if there was anything that I had missed out there. So many different multitasking going on. It looked like the only thing that I missed, I'll mention this. And if I miss something else, please type it in, folks. I don't like to miss things. But it was Fletch who said, hey, in the past you've said Qs make its lows on heavy volume, so similar to Les's question out there. So isn't a light volume low relatively bearish out here? And what I would say with regard to the Qs and its pullback is, hey, what's it going against? That swing point out here from September the 12th. So that's how I would really look at this. Yes, the QQQ series ETFs does make its bottoms with big volume. We don't have that today. I'm just taking a look at, hey, just natural swing point progression out there. But both of you made very good points out here. With regard to trying to find your typical patterns that identify any other type of bottom on any other short-term chart, 30-minute, 20-minute, 30-minute, 120-minute, so forth, 5-hour charts, I don't have anything that is showing such a signal right now. If anything, it likely wouldn't occur until overnight hours out here. The only things really that you and I have to go with, and this is how we started the show, so it's worth paying attention to that way. When it happens, should it happen, you won't be surprised by it. And that, again, is everybody's focused on the VIX index, and they really should be, but they're not necessarily focused in the right area. Today, right now, as of 155, you've got a volatility index reading the cash VIX index up 16.5%. You and I know that when you get readings of greater than 10% in one day, it's an exhaustion type move. And one of two things takes place. It was either overdone, overcooked. That's it. Sayonara. Not sayonara to the downside, but sayonara, I'm done going to the downside. And you see a bounce or a bottom come in. Today's one-day rate of change, I would say 16.4%. With regard to the trend index, it's agnostic today. It's reading 1.04, so we don't have anything to take a look at there. That's this chart. Go back and study your own chart and take a look at those one-day rates of change, and you will see what I see out there. With regard to those presidential election cycles out here, interestingly enough, beginning today, the market forms a bottom. I don't know how this happens, and then gradually moves higher up through election day. So I would say through maybe Monday, maybe it's Tuesday, and then it sells off. And that is regardless of who it is, that is the victor out there, even though the media and others would have you believe otherwise. I'm telling you, I did the exact homework out there, and that is not the pattern. That is the scare tactic of somebody out there. That's not really the reality of what takes place out here. So other than that, there's not really anything significant bottom-wise on any time frame chart that I am taking a look at, but we'll stay on the lookout, and newsletter subscribers will definitely know what the status is there. We are long-term into the mining sector out here, so we just simply will stay the course there and hope that what we did when we went long was that we caught a nice bottom out here. So that's really what the markets are doing. I don't know who's coming out with earnings after the bell today. I heard Facebook. I thought somebody mentioned Facebook. I don't know if that's today or tomorrow out here. But if we just take a look at Facebook as an example, that is pulling back today. Volume on it tomorrow night. Thank you, David. That is pulling back right now. Volume 13 million shares. What's it really going against? 19 million shares. So there's nothing really extraordinary here. Facebook, what's the number that it needs to hold? Let me go ahead and pop it up on my other screen out here. The oscillator and change line is what we're looking for. Is it trading below that? Yeah, it's trading below it right now, which is like right around the 131-ish type area. So, folks, stay tuned. Our favorite polar bear, yours and mine, David White, he's going to be up next. It is Terrific Tuesday. That means you got the Tom O'Brien Show and Andy Heck to bring it home. Have a great Tuesday. We'll see you on wonderful, wacky Wednesday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.